Hey everyone, welcome to Capital Markets Quickie. I'm your host, Endrit Sella, and today we're wrapping up a wild week in the markets. Buckle up because Friday wasn't a pretty day for stocks. So, the markets closed deep in the red yesterday, capping off a pretty volatile week. Tech stocks took the hardest hit, with the Nasdaq plunging more than 2.5%. The Standard & Poor's 500 wasn't far behind, dropping around 1.7%, and the Dow Jones slid about 1%. Overall, not a great end to the week. It was actually the worst week for the Nasdaq since June 2022, and the Standard & Poor's 500 had its roughest stretch since March of this year. Yikes. So, what drove the downturn? Well, it all came down to the jobs report. The U.S. economy added 142,000 jobs in August, which was below expectations of 165,000. To make matters worse, previous month's numbers were revised lower. The unemployment rate, though, ticked back down to 4.2%, showing the labor market is still cooling off, but maybe not as much as some were hoping. This weaker-than-expected jobs data shifted expectations for the Fed's next move. According to the CME FedWatch tool, traders now see a 50-50 chance of a 50 basis point cut at the Fed's meeting in less than 2 weeks. That's a big jump from Thursday's numbers. Fed Governor Chris Waller chimed in as well, echoing Chair Jerome Powell's recent comments that the time has come to lower rates. Waller said that if the data keeps pointing in this direction, we could see cuts at back-to-back meetings. Looks like the pressure is on for the Fed to make a move. Meanwhile, in corporate news, Broadcom shares got hammered, falling over 10%, after the company gave a pretty lackluster sales forecast. Even though they're riding the AI wave, their other divisions just aren't keeping up. That hit other chip stocks too, with Nvidia dropping about 4%. So, that's the quick rundown. It's been a rough week for the market and everyone's bracing for what's next as we head into the Fed's meeting. Stay tuned because next week's going to be another big one. That's it for today's Capital Markets Quickie. I'm Endrit Sella. Thanks for listening, and I'll catch you on Monday with another update. Stay sharp out there.